Welcome back, everyone. It's October 6th. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And welcome to our weekly update on the markets and everything financial. A ton to cover this week. We're going to try to dive into as much as possible. Obviously, there's a lot of information out there with the election and COVID, and we are going to be talking about the election and what it might mean for the markets, depending on who wins and what the market thinks about what's going on right now. As always, the information we're going to cover here is for your own personal use. It's not to be construed as advice. Always do your own due diligence or seek the advice of a professional before applying any of these strategies to your own portfolios. And as always, you can give us a call, reach out to us, go to mikeonmoney.com. You can find all our contact information there. And also all our content as far as videos go and any printed material we put out. As usual, your mics and videos are muted, so feel free to move around, drink your coffee. If you do have any questions, just click that Q&A button, type in your question, and we'll be able to see it. And we'll try to get to it today. Or if you're watching this on a replay, we'll follow up with you, or email us if you're watching on the replay. Just reach out to us, and we'll be happy to answer any questions you might have. So let's dive right into things and what's going on out there. What we're keeping an eye on is trade goods and services levels for the US and also Canada this month. In fact, we just got the Canadian deficit numbers. We'll talk a bit about that, or trade deficit numbers. We'll talk about that. As far as the coronavirus and the election goes, obviously a lot of news. Since we last spoke. Of course, Trump catching COVID and going to the hospital, as well as the last number I saw printed. I've seen a lot of names. I think there's 27, maybe a couple more since I last saw it totaled up, of his inner circle, from White House to media staff to Republican senators who have all got it. And they talk about it being from the Rose Garden event where they introduced their pick for the Supreme Court. So we're seeing a lot more names coming in there. Some people are quarantined, some aren't. Of course, Trump did return back to the White House from being in the hospital for a few days last night. And as soon as he got to the grass out of the helicopter, he took his mask off. So anyway, we do have that going. It is going to play into whether it's going to be the debates, which he's still committed to. We'll see how that proceeds, whether if it does proceed. Obviously, he's still very infectious, really shouldn't be exposed to other people, even with a mask on. So we'll see how that proceeds. We do have the vice presidential debate coming up with Pence and Harris, so that'll be interesting to watch. And they're putting some new measures in place with extra plexiglass between them, just to take extra precautions after obviously a widespread contagion in the White House right now. Supreme Court reinstated the South Carolina's absentee ballot witness rule. So if you followed this, the lower courts had struck down a rule that your mail-in vote or your absentee ballot had to be witnessed. And the Supreme Court upheld that. So if someone's in South Carolina, they're going to have a witness for their mail-in votes or absentee votes. Biden and Trump are kind of swapping roles these days, where Trump was accusing Biden from kind of staying hidden, not being out on the road. Now Trump, of course, is being forced to stay off the road, not have big rallies. Obviously, he's infectious right now, and Biden has hit the trail as far as campaign goes. So he's out in public quite a bit. One thing we noticed, the White House hasn't actually contacted the CDC to do contact tracing, to figure out who might have been exposed. And as we've seen in other outbreaks, they call them super spreader events, but at other events when there's been an outbreak, it's been really important to figure out who might have been exposed to make sure that they're being tested. Not just once, because it may take a few days up to a week, to really show up. So, you know, while since this is so widespread, obviously there's a lot of contacts, but we haven't seen the White House really reach out to do that yet. So we don't have a good idea of the extent that this might spread within the political circle there. Of course, if you follow Trump's treatment, he did get some experimental treatment, which is great, not available to everybody. In fact, the treatment is still not FDA approved. It was sought out as a special situation. The FDA let them use it, and it was designed to boost his immune system or his immune response. And then, of course, he went on a pretty heavy steroid, which I think he's still on, to boost that immune system. Of course, a lot of negative side effects to those steroids. If you've known anybody, if you yourself had to go on some aggressive steroids for treatments, they can play havoc with your organs. So some pretty aggressive treatment for him to get back to the White House and get out of the hospital, where he continues to downplay the severity. He compared it today to just having the flu and told Americans not to worry about it. Not great, given how quickly it spread within a week just in the White House. You know, a lot of things going online, a lot of discussions online about it. You know, talking about, you know, the White House now has more cases just in the White House than all of New Zealand or even the Maritimes in a matter of a few days. So that's how quickly it can spread. New York City police are preparing for unrest for the election. So, you know, there's some concerns obviously around the election. We've talked about these, you know, whether there is a Biden win, will Trump accept that? Will they take it to court? Will they step down? So New York police, and I imagine police all across the country in the US, are kind of preparing for potential fallout. We'll see, hopefully not see anything too dramatic. And 2020 now represents a turning point towards unknown, and that's what we're going to talk about. We talk about what it means, at least from an investment standpoint, what it means if we do have a change in government, and also if we don't in the United States. So other thing that's going on, Uber and Lyft in California are fighting pretty hard on this gig worker. If you followed this news, we talked about it a few weeks ago. The California courts did pass that Uber drivers and Lyft drivers were considered employees versus contract or gig workers, which is a term they use down there. And that means a big difference in cost structure, because as an employee, of course, you get a lot of benefits, a lot more cost for the employer, you know, everything from sick pay, holiday pay, unemployment, all these different benefits that have to be paid for. So Uber and Lyft are actively working against that. In California, spending a lot of money to try to overturn that classification for the drivers, and in other jurisdictions around the world where that has happened, they've actually just closed down in those jurisdictions as their price model can't support it. Rich nations are tightening the fire hose on aid. So we, again, covering this for a while now. We are going to touch a bit more in depth today on the U.S. stimulus packages. Of course, as we saw when the COVID first hit, you know, one of the good things governments around the world, Canada, U.S., everywhere, I think learned after 2008 was the need for some very rapid economic reaction, economic stimulus reaction to keep the economy running and keep it floating. And we did see that. We saw some very generous, very quick reactions here in Canada, in the US, somewhat, certainly for corporations, for the individuals, not as much. But we've seen that all around the world. Of course, as this goes on and we're actually heading into a second wave, we're starting to see further shutdowns, France shutting down again. We're seeing parts of Germany shutting down, part of New York shutting down. Even here in Canada, of course, hotspots in Quebec have reclosed the restaurants and service industries. Ontario's now taking those steps, and there's talks that BC's not far off of a further shutdown. Maybe not as it was earlier this year, but some further steps. So the markets and the economies are all looking for that round 2 stimulus package, but all indications are There will be second round of stimulus packages, but a lot more targeted and a lot less generous. So not as much help for the economy the second time around. So we're going to see those effects kind of play out a little bit more, and in certain industries, obviously a little more painful as we go into round two here, which all indications are we are knee deep into round two. It's just how far it goes. We have now a plastic pandemic. We have a shortage of plastics, of course, as we rush to create plastics, whether it's for face shields, gloves, containers, bubble wrap for all the online shopping surges, and especially going into the holiday season, we're going to see a lot more of that. But of course, the problem of recycling this plastic has not gone away. Even pre-COVID, it was big in the news, the amount of plastics in the oceans, the problem with trying to recycle it. In fact, most plastics are very difficult to recycle, and they don't get recycled. Even if you put them in that blue container, probably a lot of them are not being recycled. They're either been shipped off to other countries to be disposed in a landfill, dumped in the ocean, or even landfills here in Canada. So bigger problem there. So another challenge that we're going to have to deal with, not just in creating it for especially the frontline workers to have all the gear that they need, but how we dispose of it afterwards. So that's another issue that's coming up on the forefront of our future and economic targets that people have to set for. On the wealth side, Pelosi and Mnuchin, of course, continuing to talk on coming up with a second round of relief package in the U.S. COVID, diagnosis in the White House, of course, is slowing that down. And now Trump has said that he's not going to approve any package pre-election, that he would put out his own package after he's reelected, or if, I guess, he's reelected. His words were after he is reelected. So we're probably not going to see a second round from the U.S. Pre-election, so pre-November 3rd, out of Congress and the Treasury. U.S. service sectors are seeing a rise to above pre-pandemic level. So a big surge on services. Great news. I mean, that's obviously good. People are out there catching up on things. Probably part of that surge that we've been talking about as the service, the non-essential services reopen and come back, and people are getting out there more. There was this pent-up demand for services. We'll have to keep an eye on it to see how that levels off, if it continues a growth line, or if we see it decreasing into the negatives, or just a very slow growth. We'll have to keep an eye and see what's going on. Everything else that we've seen open has had this spike and then a very, very slow growth, much slower growth than pre-pandemic levels as things reopen. So we'll keep an eye on that as well. And no week is complete without talking about TikTok and China. I was talking to the World Trade Organization just about the ban on TikTok and WeChat being against the rules. So that continues. That's been in court. The U.S. court has put a stay on the ban. There is still the deal pending with Walmart and Adobe. So we'll see how that plays out. But for now, everyone's pushing to not ban it for the time being anyway. We did see the markets get a little skittish with Trump catching COVID. We saw immediate pullback, which was really interesting because as I was working on this week, talking about what we might see in the election, if Trump would lose, that was kind of the market saying this is what we might see. Now, when we see that pullback, that doesn't mean we think the markets will do poorly if the Democrats going to win. It just means different areas of the markets will do different, might react differently. And what we saw a pullback in certain areas of the markets, which we'll discuss a little bit more, that Trump has benefited versus other areas of the markets that Biden or a Democratic government might benefit. So we'll see how that plays out. Fed must be in it for a win for inflation goals. This goes back to the inflation that we've been talking about. With all the printing this money, all the stimulus packages, of course, we're driving up inflation, not just in the U.S., Canada, everywhere. And they do have a goal to keep it around or get it around 2%. Inflation does mean growth, so it's not a bad number. But if it starts to continue to grow, then it can slow down growth as we have to raise interest rates to slow it down. Of course, raising interest rates slows growth. So they're targeted to keep it around 2% to 2023. Will they be able to do that, or will it push up above 2.5? That's the big question. That's what we're keeping a really close eye on, and that's why we talk about gold all the time, because of course gold is a great inflation hedge, and gold will go up as we see inflation rise. So we're monitoring the Fed policies really, really closely as they try to manage these things. As far as the numbers go, we continue to see growth worldwide. Almost 36 million total cases globally. The U.S. is almost 7.7 million, 250,000 total deaths in the United States. Canada is actually making a surge. Not great to see. Almost 170,000 on the infected side. 9,500 total, which is a bit of a jump from our previous weeks, as we've seen, bigger breakouts in Quebec and Ontario, and the numbers in BC have been growing pretty steadily as well. We've also seen some care homes start to get it again. Of course, the very vulnerable people in there as they try to keep that down. So Canada is seeing challenges that we were hoping to avoid. So far, not unmanageable for our medical system, but they are growing. So we'll keep a very close eye as we see more shutdowns here in Canada, certainly in the eastern provinces. Just taking a look at the markets, we did have some great couple days yesterday and today in the markets, as we did see a decline at the end of last week, of course, with Trump being diagnosed. And I wouldn't put that on Trump. I think anytime you would have had the sitting president of the United States diagnosed with a deadly disease, you would have seen the markets pull back on some uncertainty. Of course, as he went back to the White House on Monday, we did see that pick up, and again some pick up again today. It's really recovering what we saw on Friday. A little bit of optimism out there that he made it back to the White House that quickly, and he might be one of those lucky ones where it doesn't hit him as hard as some. We did see the U.S. dollar rise a little bit. Of course, as we've talked about, the U.S. dollar is a flight to safety. So whenever the markets go down, dollar will go up a bit, and vice versa. As the market strengthen a little bit, the dollar will slightly, head back down again. Oil did have a bit of a jump for a few different things. We've seen a couple of mergers, some activity in the Norwegian offshore oil and gas as they shut down production to limit supply out there. And of course, we have another storm on the way, but we'll talk more about commodities. Coming up in the U.S., the Commerce Department is about to release their trade deficit data. It is expected to widen a little bit from previous months in July. Job openings and labor turnovers are expected to come out. And the one thing about that, they are expecting it to improve, more jobs, but that growth in jobs has slowed dramatically, which is not a great time. It's certainly not headed to pre-pandemic levels, and the rate, month-over-month rate, is slowing. And if we do see more shutdowns in the United States, of course, that could reverse direction for us. Big factor for any economic recovery is the unemployment numbers, is to get those down as much as possible. And as it stands right now, we'll likely be heading into one of the highest unemployment numbers in the U.S. election, or certainly in the top 2 or 3. The House Representatives Council or Committee, is continuing their antitrust panel with CEOs of Facebook, Google, Amazon, and Apple to testify. And this is just, how much control do they have over the markets? Are they pushing out competition? Nothing new. These giants have been in these panels in committees many times, and I think the outcome will likely be overshadowed by the election over the next month. Levi's has announced their third quarter earnings with some quarterly loss due to drop in revenue, and very common in any retail business. Levi does not have a big online presence as far as e-commerce goes, so they've seen weakness from the shutdowns during the COVID. So we'll keep an eye on them. Might be a good turnaround story depending on what we see with the second wave. Other top news is don't be afraid of the virus. As I mentioned, Trump came out and out of the hospital basically telling people it's not that bad. Not great news given that there's 1 million dead globally. It's not kind of what we want to see the leadership of any major country message out there. I guess he can hold himself lucky that he has some of the best healthcare in the world and was able to stave off the worst parts of the disease, or hopefully he does. Bristol Myers, we've talked about a couple of mergers and acquisitions already in the past few weeks, especially in the pharma and energy sector, and Bristol Myers is expanding their drug business by acquiring Myocardia. So we'll continue to see that. There's a lot of activity happening in the pharma, both because of COVID, as companies try to develop more and more, not just vaccines, but treatments for COVID. A lot of money flowing into that sector, but also the potential of the election bringing a universal healthcare to the United States. Companies want to be well positioned to take advantage of that, or to be part of that. Microsoft announced that they're going to build a big cloud hub in Greece, which is good news for Greece. Greece has been economically crushed for almost 10 years since their economic crisis. And of course, COVID's been pretty harsh on them, as well as they've seen shutdowns in all the tourism. So good news for them as Microsoft invests in their economy, and also creating a lot of jobs. So we'll keep an eye on as Microsoft expands there, and we'll probably see a lot of the tech giants, given that geography and location does not affect their services that much, start to seek cheaper and better regions to expand in or put infrastructure in. Google is deferring their Indian in-app fees as they get a lot of complaints from some startup applications. I don't know if you followed this. I think we covered it a few weeks ago. I'm pretty sure we covered it a few weeks ago. There's a big court case going on with Apple. Google's included as well, and Apex Video Games. Apex violated Apple's App Store rules by charging people outside of the App Store, so cutting Apple out of their fee, I guess. Apple takes a fee on the top of anything anyone charges through their App Store, and Apex went around that. So they did that on purpose. They wanted to take this to court to try to get the courts to rule that that's not a fair fee, that because there's no other option, it's unfair to especially smaller producers. Apex is huge, not as big as Apple and Google, but still pretty large in its own right. So Google, pre that lawsuit, was pushing for in India to put their fee structure in the App Store there, and of course now they're pushing back based on the outcome of that case. So Google has deferred it to not flame further problems for that case until after they get a ruling, and likely if the ruling goes in their favor, those fees will be put into place. If it goes against them, then obviously they're going to have to figure out a new structure. Also on the mergers and acquisitions, Weir Group is to sell their oil and gas division to Caterpillar. Again, the energy sector is seeing a lot of consolidation here. This is not going to end soon. As we've talked about many times, not a lot of push for the oil and gas sector as demand continues to stay low. Canada, the trade deficit actually has come out. It was expected to narrow a little bit to about $2 billion versus July, which was 2.45. It actually grew. I believe the number was 2.6 billion. Don't quote me on that one. But the trade deficit did grow, so that number is out. So that just means that we imported more than we exported. last month, and that trend has been growing. So we'll keep an eye on that, and that's likely due to the slowdown in the oil and gas, which is a big part of our economy. Also going on in Canada, more M&A in the energy center. Wilkes Brothers is upping their bid to buy the oil field firm Calfrac. So just trying to get the shareholders and board on side, as it's a hostile bid by upping their offer for that. So just more M&A. Again, talking M&A, we're seeing M&A activity pick up for the third quarter from lows. Obviously, everyone backed off with uncertainty of not knowing what things were going to be valued at or how quickly the economy was going to bounce back. So it is a good sign that we're seeing this more M&A activity. That means companies feel that valuations are fair or worthwhile, at least to go buy. So that's a good sign, actually, that we're seeing some good valuation and there's some strength in the economy, or at least not a big pullback in the economy from here. That we may have, let's call it, reach economic bottom, but certainly valuations in the fair range. The Bank of Canada is, I guess, funny story. I don't know if you followed this, but the Bank of Canada is trying to get cute and try to relate to people. So they hid a Space Invaders game in their webpage when they launched the new $10 bill, which has got a lot of I guess goodwill with the younger generation as they went in there and found that. So they got into the news just by putting video games out there. TransCanada Energy is buying out the balance of TransCanada Pipeline. So not a big M&A. They already owned a big share of it. They were just taking out the balance of the purchase, which is good news as well. And Greece, again, out there trying to grow their economy, approved El Dorado's gold test drilling. So expansion of the gold, as the gold price is increasing, we're going to see a lot more countries and companies trying to expand their gold fields. On the currency front, we've touched on a bit. We saw the dollar weaken a bit after it had some gains when Trump was diagnosed, and then started to weaken again yesterday and today as we see Trump come back and the market strengthen again. Overall, we expect the trend of a weaker US dollar to continue over the next little while. I forgot to mention, the Canadian dollar closed at 75.33. So a little bit of bump up from last week on the Canadian dollar. On the commodity front, we mentioned we saw crude jump up a bit. We meant, mostly due to the Norwegian shutting down some supply. Also, we have Tropical Storm Delta coming in, forcing some of the producers down that way to shut down temporarily. They always shut down before storms coming in, especially Delta's looking like it might come in at a Category 4. So to try to prevent damage and spillage, they'll shut down pre and reopen afterwards again. Gold prices have been holding steady after they had some gains as they bumped up after Trump got out of the hospital. So it rallied back over 1900 again. So holding pretty steady for the last few weeks. Again, we're still a bit bullish on the longer term trend on gold, just on that inflation front. So now let's take a look at the election and what that means. So everyone asks, what happens if Trump wins? Is it good or bad? What happens if Biden wins? Is it good or bad? Well, before we get into kind of what we really see in the markets, let's just talk about, what an election means for the markets in general. So there's 10 truths. The markets have performed well under both parties, right? So whether it be Democratic or Republican, they both have experienced good markets. So it's really not one versus the other. Investors are often better off staying fully invested, going into elections. If you're already in there, if you're not in the market or you have cash on the side, I might wait to just pre-market because, as I've always said, markets do not like uncertainty of any kind. And the tighter an election is, the less predictable it is, the more the markets will react ahead of that election. So that doesn't mean it's going to crash. It just means it might slow down a little bit as it pauses to wait to see the outcome. And we're already seeing, you know, even in the news, there's talks of things being paused prior to the election just to wait to see who wins. A win by either party does not radically re-engineer the economy. We'll dive a little bit more into what that means, but you know, if Biden gets in, he doesn't walk in one day and flip a switch, and the U.S. economy is completely driven by something else. It continues on. It's a big, big engine. You can't shut it down. And if you want to change its course, it takes time. It takes a lot of time. So the election right away doesn't immediately change what's going on in the economy. Historical narratives, sometimes we put it here. It's not always as you remembered it, because we tend to look at the governments based on who we liked and didn't like. And we sometimes lay that narrative over on the economy, but the economy does not pay attention to that narrative. It really moves on under its own sails. Signature legislative accomplishments are infrequent and impacts not always what expected. And that just means, you know, if you take a look, whether you had Obama or even under Trump, you know, you've got the Congress, the Senate, and the president. You know, they're not always speaking the same terms, and to get things done, it's not always that easy trying to, if you don't have all three of those arms of the government. And even if you do, it's not always easy to get exactly what you want pushed through. So just because some president or a president wants to do something doesn't mean that they can achieve that. And if they do achieve it, it may take time. Take Obamacare. It took Obama almost 8 years to get that through. And the Trump government has been spending 4 years trying to get rid of it, and it's still there. So it doesn't happen overnight, kind of idea. Predictions can often be wrong. We'll show you some examples there. You know, if you're trying to predict on politics, they generally can come wrong. You know, there are some things we can look at that can give us a better idea. Monetary policy matters way more than the president, right? And you'll see some graphs today. Just shows that, you know, if interest rates are on the rise, of course that's pressure on the economy. That's going to affect the markets. If interest rates are on the decline, that's, you know, bolsters the economy, and we see growth in the market. So that matters a lot more as to who's president. It's okay if you don't like the president. The market doesn't care who's president. It doesn't have a personal opinion. It really comes down to a few other factors. No, this isn't the most vitriolic or worst, you know, mudslinging election that we've ever seen. We've seen some worse ones out there. I'll give you a couple of examples here in a minute. It does seem, it's certainly one of the worst ones we've seen in a while, but history is out there that this is not one of the worst ones. And you know, let's not get confused between partisan politics and market analysis, because really what we want to watch is those economic indicators, not what's going on in the political arenas. So just to take a look at what's happened in the past, both parties have had very successful markets. In fact, most presidents during their terms have had an overall, even if part of their term was negative, overall have had positive returns. Only Bush and Nixon not having it. And part of that, you know, where we saw the markets, we had the financial crisis of 2008, pushing that down with some stagflation, and pushing that down with the financial collapse, and then of course stagflation all in the 70s there that pushed that down into the negative. So neither party can claim that we have done a better job over the long run. All presidents have had a period of strong growth. And different things have affected it. You know, some policies have shifted to cause that growth. I mean, we saw Carter, who did a great job of showing job gains, which of course is great for the economy. You know, almost grew by 20%. So that's flat blue line is kind of your post-World War II trend of job creation. And under Carter, he drove those higher. Under Reagan, here, I'm just going to move my little face here so you can see that. When we look at income gains, so the kind of the weekly earning growth for companies, under Reagan, it outperformed. So that drove growth through that period. During Obama, it was consumer price index, so inflation, despite really strong growth in the markets during his presidency, he managed to keep inflation trends low, which stimulated growth. Because if you don't have high inflation, you can have low interest rates, which stimulates growth. Under Trump, actually, the number that actually has driven the economy during his is capital expenditures, which has been low. So that means companies have had to spend less money during his presidency. Unfortunately, that was mostly driven by his corporate tax cuts, which was supposed to drive up capital expenditures to, that trickle down effect. So the companies were supposed to make all this extra money and pass it on to the employees and the workers in order to stimulate economic growth. And that didn't happen. The companies just kept it, which is good from an investment standpoint. Not really great if you're living in the U.S. Hoping for a stronger economy. So that was drove the markets during his presidency so far. So all different factors affect the markets under different governments. So we keep that in mind. As I mentioned, monetary policy does make a big difference. So that blue up and down line is your interest or inflation rates, and which direction monetary policy were going down and when they were raising rates. Of course, if you look at those gray boxes, that's when the markets were growing, and it's pretty straightforward. Monetary policy, if interest rates are going up, we see weaker markets. If you have interest rates going down, you have stronger markets. So that's why that's way more important than who's president. Of course, we're at almost a 0% interest rate right now. And if I've talked to you in the last few months, or if you've asked me the question on one of our reviews or phone calls, my opinion on who wins this next presidency, taking the people out of it and just looking at the parties. The real challenge here is going to be whoever wins is going to have to deal with the very high unemployment rate, an interest rate of almost zero, and heading into inflation. So that means they've got to manage inflation in a way that they can't scale up interest rates too quickly, because of course that will drive down markets and slow economic growth and defeat your job creation efforts. So you've got to create jobs, you've got to hold off inflation, and you've got to keep interest rates low. That's a very, very difficult job. Doesn't matter who's president, doesn't matter what party's in there. There is going to be some challenges there to manage. Not impossible, it's been done, but that's what's really going to matter after this election, is what are they going to bring to the table from that front. So as a countdown to the election here, how do the presidential affect the market? As I mentioned, it doesn't really care. There's the markets with all your different presidents. You can see trend upwards. We do see drops down, but those go in line with the monetary policy, not so much as to who's president. So just I promised you some examples of some bad things in history. George Washington had a massive fight with the media when he was running for president. So did Thomas Jefferson. Insulted the media all the time. They had horrible headlines, and in fact, Alexander Hamilton, fought in a duel just before the election and killed someone and still got elected. So as long as Pence doesn't shoot Harris at the debate, I think we won't go on the record as the worst ever. So it is not great to see. It certainly is not what I would want to see in a leader. The behaviors we're seeing out there, however, it's not the worst we've seen in the past. There is one index out there that I do follow quite a bit. It's called the Misery Index. It's actually a combination of inflation and monetary policy, inflation, monetary policy, and unemployment. And that really tells me more about where the economy is headed. And it's a much better predictor of kind of the direction we're going to be going, as opposed to an election, who's going to be in there. So, if you want more information on it, reach out. I do find it much more insightful. If we have rising unemployment and rising inflation and rising interest rates, then we're definitely headed for a tough market. That doesn't mean that you can't have growth in the market. That doesn't mean your portfolios are going to crash or anything like that. It just means we have to manage the portfolio for those conditions, and high growth market is not what comes with it. We really have to focus on cash flows and things like that, which, you know, we prefer to anyway. They're the smarter way and lower risk ways to make money out there. So let's really take a closer look at what happens. And so let's see what their platforms are telling us and what we can expect. So if Biden wins, he's committed to cancel the Keystone XL pipeline, which Trump has said he will definitely go ahead with. So, you know, when we look at the energy sector in particular, obviously that's going to impact it further. If Biden were going to win, you know, harder to transport, you know, more costly to transport, fewer jobs in that sector if Biden goes in. You know, Trump, you know, he's been a big proponent of that. Biden's also committed almost $1 trillion towards kind of not the Green New Deal, but environmentally favorable, focused energy industry. So kind of a cleaner energy, greener energy. He really wants to push a shift away from the fossil fuels. I'm in agreement in general with that approach for even Canada and any country, and that's not picking, you know, one or the other. Even if I peel out the climate impact of that, you know, the cost effectiveness of fossil fuel is on the decline. Technology has got to a point where the cleaner techs are becoming much more energy efficient, more cost effective, and easier to get and produce. So, you know, oil's on the way out, and fossil fuels are on the way out, as they're, you know, just as much as we've seen with the coal industry. They just got outdated by better technology, which happens to be cleaner technology, which of course gives us all that other benefit of environmental impact. So I like that, you know, that investment into the environment. It also creates new jobs, as it's an industry that's growing as opposed to an industry that's shrinking, which is on the fossil fuel side. So that's a big difference. So clean tech will do a lot better under Biden as far as investments go. Other sectors, Democrats tend to, you know, also favor healthcare. Of course, they bring in universal healthcare, technology, clean tech we mentioned, and utilities, more infrastructure spending. And that infrastructure and utility spending, again, versus the current U.S. government is focused around new technologies, more efficient technologies and cleaner technologies, which is really good on the job creation front because, you know, again, if you train in a new force into a growing technology, new technology, they might not have permanent jobs in utilities, but that trains them to go into other sectors and take that expertise into other areas that is in demand, as opposed to the, you know, when we talk about fossil fuel or the oil, coal, natural gas arena. You know, as those dwindle, those jobs become fewer and fewer and fewer. Trump is also committed to a new train from the Canadian oil sands to Alaska, which has got approval already, but Biden has basically said he will not proceed with it. So, you know, different infrastructure jobs, you know, again, moving fossil fuels more efficiently, but it's in constant competition with that new technology that's out there. The other big thing out there is housing. So we talk about real estate. It is currently doing well in the U.S. Trump and the current government in the U.S. is pushing for the privatization of Fannie Mae, Freddie Mac. So, which is good. It kind of doesn't unconstrain them, but it allows them to provide cheaper and easier access to mortgages for especially the low and middle income earners in the United States. So that means more buyers in the market. So of course, more demand, higher housing prices. That being said, keep in mind, that's how the bubble got started, and you know, that blew up in 2008 was Fannie Mae, Freddie Mac were, you know, out on their own, and the government was just guaranteeing it, and the government had to take control of that to kind of shore up the problems that they gave away too many high-risk mortgages. That's not to say that's the path that they're going down, but the Trump government is moving to get to that level. Whereas Biden is kind of committed to keep that under the government, control it a little bit more, keep the mortgage quality in check, which can be good as well, but it will make mortgages more costly and less available, which will put some strain on the housing markets in the U.S. Doesn't mean it will crash it. It might just keep it at a slower growth than if you privatize it, but it might prevent a big crash versus privatizing it, where in the past it has led to a crash, obviously in 08. And then postal banking. So we've all heard the news around the Trump government of, well, the implications are talks of dismantling the U.S. Postal Services and spinning it off potentially. I won't say they will do that, but potentially spinning it off, or at least running it like a private company, like a private courier, being more costly, different services, more like a FedEx or UPS, to make it profitable. Whereas on the flip side, on the Democratic side, you have the Postal Service is actually written into the U.S. Constitution as a kind of a governmental service. It's not supposed to make a profit, and there's a lot of concern as to why it's making a profit. It's all about prepaying pensions, which is costing them $1 billion a year, et cetera, et cetera. But really, the big difference here between the two is Biden as government, or Democratic government, would reinvest in the Postal Service to bring the service levels back up again, and very likely expand, or certainly he's indicated that they would expand to postal banking. So this probably won't affect too many people in the city or in the big cities, but certainly more rural, where you don't have bank branches on every corner. You could do your banking at the post office, cash check-in. So if you look at these overnight cash places where you can cash a check for a fee, or get short payday loans, kind of type of things. The Postal Service, which is actually has provided those services in the past. They moved away from that years and years. I can't remember how many years ago. I think decades. But moving back into that arena, mostly again targeting the smaller communities, the more rural communities where those services are more needed versus in the cores of the big cities. But bringing those services back as a revenue source for the Postal Service to shore up its services in other areas and keep it as it is an important an important service. For sure, if you live in a downtown core, it's super easy to use FedEx and UPS. But if you do not, FedEx and UPS or any private couriers don't necessarily service the more rural areas of the world, and certainly not of the U.S. And people rely on the post, not just for letters and bills, which we can get over email, but medicines and shipments of goods and things like that. So those are kind of the key areas we're looking at when it comes to these two different governments. Obviously, it's going to be a very, very tight 30 days. I can only imagine what we're going to see in the news. The October surprises. We seem to be getting everyone. Just last week we had Trump's tax returns, which of course were appalling on many levels. His diagnosis. We've got the Supreme Court going on. And we still have, just under 30 days before the election. So it's going to be a very interesting month. We'll try to keep on top of all the news. If you see something you're concerned about your portfolio, you want to discuss, as always, reach out to us. We're happy to walk you through any scenarios or talk about what the impacts might be. You can reach us at mikeonmoney.com. And you can, right on there, you'll be able to find my phone number or email. You can even access my calendar there if you want to book an appointment for a chat, or just give us a call. Always happy to schedule something in or talk to you right then and there if I'm available. With that, I'll let you go enjoy your day, and we'll talk again soon. And I look forward to next week. And we've got a new video we just put out just on our services. If you're interested, it's a little bit of a propo video. just on all just services and how you can reach us. So not a deep dive this week. There was just too much going on with the election and and Trump to get on top of a video this week, but we will return with a new one on Friday. So with that, thank you very much. Look forward to talking to you again soon. Bye now.